Welcome to The Explainer. Today we are diving into something really fascinating, a framework drawn directly from Denise Shull's groundbreaking work, Market Mind Games. If you've ever been told to just, ignore your emotions when making big decisions and felt like that just doesn't work, well, you're absolutely right. We're going to completely flip conventional trading psychology on its head here and look at how the best minds actually manage risk and uncertainty.
So ask yourself this. What if everything you've been taught about decision-making is just wrong? Think about it. For decades, the entire financial world has basically run on this one massive assumption, that emotions are the absolute enemy of a good decision. We're told over and over, conquer your feelings, put them in a box, and just look at the cold, hard data. But what if that conventional wisdom isn't just a little bit off, but literally exactly backwards?
That brings us to Denise Shull. And just to give you some quick context on how influential she is, Shull isn't just anyone. She's a former trader, a globally recognized performance coach, and actually the real-life inspiration for the character Wendy Rhodes on the hit show Billions. Her core idea is pretty profound. What if the mystery of market crashes stems from a simple but total misunderstanding of our own minds? In other words, these massive catastrophic failures aren't just mathematical errors. They happen because we completely misperceive ourselves. Instead of pushing our feelings away, what if the absolute best way to win the investing game is to learn how to actively read them?
Okay, let's get into Section 1, the myth of the Vulcan.
Whenever we picture the perfect decision maker, we usually imagine, Spock from Star Trek, right? We kind of falsely idolize this cold, purely logical, completely emotionless machine. But trying to be that old-way Vulcan, suppressing your emotions and relying totally on data, it's incredibly fragile. When you try to just shove your emotions out of your awareness, you don't actually get rid of them. You just make yourself blind to them. And then, they drive your behavior completely unconsciously, and you end up cracking under the pressure when your perfect models inevitably fail. Now, contrast that with the new way, the emotional reader. This is Shull's gold standard. It's all about emotional intelligence and integration. Instead of ignoring that knot of anxiety in your stomach or that huge surge of overconfidence, the emotional reader treats those feelings as real, vital information about the market and about themselves.
Moving right along to Section 2, why the numbers lie.
So, if we aren't supposed to act like Vulcans, why are we all so obsessed with the numbers? Well, honestly, because numbers give us this really comforting illusion of control. But we've got to shatter that illusion. There is absolutely no better case study for the danger of pure data than the year 2008. Think back to the sheer brain power and the machines running the markets back then. Traders and institutions genuinely believed they had risk perfectly mathematically measured. They had literally the most complex models ever created. And yet, when the entire global market actually shifted, those pristine calculations totally missed the collapse. Why? Because most market models assume tomorrow will look exactly like yesterday, and they completely, totally ignore the wild unpredictability of human emotion.
The whole crux of this is captured beautifully in this phrase from the source material. Numbers look you in the eye and lie. Data all by itself simply cannot predict future outcomes because it totally misses the live, active, emotional human element that actually drives the market. Look, numbers are just representations of reality. They aren't reality itself. They get manipulated, they're often incomplete, and most importantly, a spreadsheet doesn't feel fear or greed or sheer panic. And those are the things that actually move the needle when the pressure is on.
Which brings us to Section 3, treating feelings as data.
So if being an emotionless robot is off the table, what's the alternative? Shull proposes this massive revolutionary shift. You have to stop fighting your feelings and start analyzing them. You actually need to treat your anxiety, your excitement, or that weird hesitation you feel as hard, actionable data points, just like a tick on a stock chart. And to get why this is so crucial, we have to realize that perception isn't passive, it's extremely active. What we expect to see completely colors what we actually see. Shull calls this the billion-dollar bonfires problem, using the metaphor of that huge 2010 volcanic ash cloud that grounded flights all over Europe. When we misperceive the market because of our own unacknowledged emotions, we create a psychological ash cloud. It totally obscures market reality, and that's exactly how catastrophic billion-dollar mistakes happen. We see what we desperately want to see, or what we are absolutely terrified of seeing, instead of what's right in front of us.
All right, Section 4, the neuroscience of decision-making.
Now, you might be sitting there thinking, okay, this all sounds a bit theoretical, but let's look at the actual hard science here. Suppressing your emotions isn't just a bad strategy. It is literally biologically impossible. First off, emotions are fundamentally integral to reason. You cannot separate the two.
But the truly mind-blowing part is that in human decision-making, the brain's emotional centers actually light up and activate before the rational centers do. Just let that sink in for a second. Your feelings are literally your true first responders. By the time you consciously think you've made a purely logical choice, your emotional brain has already had its say. That is exactly why unconscious biases drive our behavior, and why bringing those hidden emotions out into your conscious awareness is your single biggest edge.
Let's move into Section 5, the archetypes of risk.
Let's take a look at the spectrum of decision makers out there. As we walk through these 3 flawed archetypes, I really want you to self-identify. Which one of these traps do you fall into when things get hot? First, we have the Vulcan we talked about earlier. Their whole thing is emotional suppression, but their fatal flaw is that they crack under pressure because they're basically denying their own human nature. Next up is the number worshiper. This is your classic data addict. Their fatal flaw: they are completely blind to any reality that isn't in their spreadsheet. So when the market acts irrationally, they just freeze. And finally, we have the intuition truster, the gut player. Sure, they're fast, but their fatal flaw is a total lack of self-awareness. They constantly confuse genuine experience-based intuition with raw, biased emotional reactions, like sudden panic or greed. Leaning too hard into extreme data or pure gut instinct is going to leave you highly vulnerable.
And that leads us to our final part, Section 6, building your psychological capital. So how do we actually fix our market vision? We do it by actively building up what Shull calls psychological capital. This refers to your emotional and cognitive resources. We're talking about things like your self-awareness, your mental resilience to bounce back after taking a hit, and your inner confidence. The ultimate performer, the psychological capital builder, manages these internal resources with the exact same care, rigor, and respect as they manage the actual monetary capital in their bank account. Because the absolute truth is, if your psychological capital gets depleted, your monetary capital will follow right behind it.
So here is exactly how you build up that capital on a daily basis, right before you make a move. Step 1. Journaling. Make your feelings explicit. Write down your anxieties, or even your excitement, before you trade. That way, they aren't secretly operating in the shadows. Step 2. Monitor your physical body awareness. Are you clenching your jaw? Is your heart racing? Your physical state is a direct pipeline to your emotional state. And Step 3. Read the market's emotional state. Remember, the market isn't a machine. It's a massive, shifting crowd of real human beings, and every single one of them has their own fears and biases. Let's pull this all together with a really profound thought from the source material. Once you give up on finding the facts, the mind game of the markets is in your mind and nowhere else. The market isn't some external, objective reality just sitting out there, waiting for you to conquer it with the perfect math equation. It really isn't. It is simply a massive reflection of collective human psychology. The facts are literally constructed in our own minds, completely based on how we perceive them.
Which leaves us with a final, pretty provocative question. If the market is truly just a reflection of human psychology, are you mastering yourself? The very first step to mastering your investments, your trades, and your risk is taking total control of your own emotional data. Seriously, don't fight your feelings. Start using them. Thanks so much for joining me for this explainer. I really hope you walk away today seeing your emotions not as an enemy, but as your absolute greatest asset. Keep learning and keep asking the right questions.